I'm a little underdressed today because being in the UK, we're smack in the middle of a goddamn heatwave! As world events continue to push rally in the defence industry, I recently carried out a full deep dive. So if you want the full breakdown, check out the link below for a video packed full of information. However, at over 25 minutes long, it might be a bit too intense for some viewers, so this is one of 3 videos I'll be uploading to cover my top 3 companies, and in this one I'll be covering Northrop Grumman. Here we go. The defence industry can be quite incestuous, with various military products being collaborations between separate companies, so I'm going to break down the industry by focusing on the areas they are operating in. If you've been watching any coverage on the war, then you would have noticed how Russia's strategy was initially based on a practical invasion with their tank fleet, with an expectation that they could win within a matter of weeks. Putin failed to account for mass corruption in military leadership and unmotivated and poorly trained military personnel, outdated, poorly designed military equipment and supplies, and pitted this against a country highly motivated to fight back and the Western world more than willing to support them through military supplies, with over $3.4 billion worth of weapons sent by the USA so far. And the threat imposed by a determined Cold War tyrant, that is Putin, has caused many countries to realise how far behind they have fallen with their military forces, and they need to seriously boost their defence spending. With global military spending reaching a record $2 trillion in 2021, 20% of this figure comes from Europe, where countries have been bolstering their defences in response to the Russian annexing of Crimea. 14% was spent by China with their escalating military presence across Asia, and in 2020 Australia responded to what they called a poorer, more dangerous world and rise of China by pledging $270 billion to be spent over a 10-year period, and they have been particularly focused on their long-range missile defence systems. The USA remains the biggest contributor, with $801 million spent on defence in 2021, and in March alone the country attributed a $13.6 billion aid package for Ukraine. So with budgets on the rise, I've done the research, I've gone over the fundamentals of the top defence companies. To understand this, here's a breakdown of how these companies are playing a role in current world events. Northrop Grumman, the 4th largest defence contractor in the US, and the reason this one stands out for me is that if we take out the giants and focus on the small cap companies, you can see they are leagues ahead in terms of annual growth. The company has a large portfolio of space technology and ties to nuclear defence systems, including stealth bombers, missiles and submarines, and they have been tasked with modernising the USA's ground-based strategic deterrent, replacing the country's Minuteman-free ICBMs with next-generation technology, providing a vital nuclear deterrent that I hope will never be needed. Also, one of Australia's most significant military providers is BAE Systems, a UK-based global manufacturer and supplier in air, maritime, land and cyber defences, and they are a partner in some significant defence projects, including Lockheed Martin's F-35 fighter aircraft series, which is built in partnership with BAE and Northrop Grumman, both of whom have secured contracts to support Australia's Joint Strike Fighter Maintenance Hub in Williamtown, where they will provide maintenance, repair, overhaul and upgrades across the Asia Pacific for military aircraft, with the F-35 design and production work alone being valued at around 1.38 billion Australian dollars. There's also the Surface Electronic Warfare Improvement Programme for the Navy, which was originally initiated by Lockheed Martin. Block 1 providing electrical enhancement to existing ship warfare systems to improve their anti-missile defence, counter-targeting and counter-surveillance capabilities, which since 2009 was replaced with the Block 2 system, which upgraded the antenna, receiver and combat system interface with early detection, signal analysis and threat warning. Since September 2020, Northrop Grumman and the US Navy Program Executive Office Integrated Warfare System are developing Block 3, which will upgrade Block 2's abilities by the addition of a high-end electronic attack capability, as well as other ancillary functions, including early detection and possibly long-range, high-bandwidth communications using a new active electronically scanned array emitter. The system will introduce non-kinetic electronic attack options that allow them to seek out and destroy those threats. It uses blasts of precise radio frequency energy that can be continuously fired at multiple targets, and as it doesn't use kinetic ammunition, it can in theory be fired an unlimited amount of times. Northrop's first 2 systems were developed in 2018 under a $26.6 million modification to a contract with the Naval Sea Systems Command. Last year, Northrop was able to secure a contract worth up to $1.16 billion for further systems, which includes $101 million from last year, along with $254 million this year for further development. Lockheed delivered over 100 of their Block 2 systems, and assuming each Block 3 system is priced at $13.8 million, that's a potential market of $1.38 billion if Northrop were able to upgrade them all. And if Northrop are able to follow through with their plans to scale the weapon to fit larger and smaller ships in the fleet, the value of that scale production could increase to billions more. So as usual, this is where I'm going to try and go over all the financials to explain which companies are offering the best opportunities for investors. Having gone over a massive amount of data, I'll be breaking this down by focusing on the few companies that I think offer the best value. With the choices left, I don't like to buy companies trading over 15 times earnings, especially with companies with a PEG ratio over 1. But all these companies are seeing momentum brought on by recent world events. So I'm going to explain why Northrop Grumman trades at fundamentals that represent the increased value and growth of the company, not market sentiment. Focusing on Northrop Grumman, the company has just come out of a bad quarter, reporting total sales of $8.8 billion, which is a 4% decline from the $9.16 billion recorded in Q1 last year. Net earnings fell 56% from $2.19 billion to $955 million, but these drops are largely a result of labour shortages and COVID-related supply chain disruptions. And of note is that these were limited to their traditional defence sales streams, whereas space systems were up by 13% to $2.85 billion, compared to $2.52 billion last year. CEO Kathy Warden noted that the defence spending in the US is only growing at a rate of 4 to 5% a year, despite growing threats across Europe. In contrast to NASA's budget request for 2023 rising by 8%, as the government is leading towards more space-based defence and exploration. For Northrop, they are leading the way in government space security efforts and are seeing a boost to their development programs, which include a $1.1 billion boost to GBSD and $206 million on their next generation interceptor. Space systems are expected to continue as one of their largest revenue producers, as their portfolio already includes a $692 million contract with the Space Development Agency to produce 42 low Earth orbit communication satellites for a mesh communications network. On top of the 2020 $2.3 billion Space Force contract as part of their next generation overhead infrared program to develop missile warning satellites, with another contract expected for production and integration expected in 2022. Further $341 million contract came from the Space Force in February for Deep Space Advanced Radar capability to advance global situational awareness. They were included in a $2 billion contract from Boeing and Lockheed Martin for GEM 63 rocket boosters to help the United Launch Alliance launch Amazon's Project Kuiper satellites, plus a $930 million contract with NASA to provide their Halo Outpost module for use in Project Artemis, which will orbit the moon as part of a plan of long-term exploration of the lunar surface and deep space. Just over the last 5 years, they have seen their revenue grow 37% from $26 to $35 billion, and that's with net income to shareholders following with a jump of 243% to $7 billion last year. It's incredible to see how the company has been able to overtake the competition in terms of earnings per share, and as of last year, they continue to grow in assets, maintaining a strong cash position and consistent equity. Analyst ratings predict the company to grow at a compound annual growth rate of 3 to 11%, and although such reports might have the stock mostly priced in at present, I think the company is on the verge of blowing up as they gain some key contracts over the next few years. And to top it off, like Lockheed, they maintain a policy of returning free cash, such as the $2.1 billion in 2021, back to shareholders through stock buybacks and a dividend that has been growing each year since 2004. Priced at $475, this amounts to a reasonable and reliable yield of 1.46%, which is great news to investors who love a dividend. Warfare is a complicated and incestuous industry, and it's taken a lot of time to put all this information together. Now, there are other companies I haven't covered in detail, Raytheon, L3Harris, etc., that have their own roles in the industry, but I focus on the companies that show the patterns of growth that I look for in investment. I've identified 3 companies that are showing strong positions in the market, good organic growth in their earnings, and stock prices based on their productions and contracts, not market sentiment. Comparing these 3 to the S&P 500, they are not immune from market crashes, but as the defense industries recover over a general bull run, they have had a much faster recovery than the competition, with Northrop in particular outperforming the S&P during its current downturn. If you want a full breakdown of all 3, then check out my full deep dive of the industry in the link below. If I had to summarize these 3 companies, I would say that Northrop Grumman offers a more speculative entry into the most advanced area of defense and could be a stock that blows up over the next few years. As part of routine rotations in my portfolio, I have moved out of my BAE positions as I felt the stock has climbed a little too far too soon, and I may consider taking on BAE again if it comes back down, the dividend improves, or the others become too expensive to continue investing in. For now, it's back on my watch list, and I'm building my positions with the other 2 a bite at a time to balance out the current volatility in the market. Overall, I think these companies will stand the test of time, responding to the growing world hostilities and returning profits to shareholders over the long term, and that's pretty good for investing. So that's my take, and if you like what you see and you want to see more, please smash that like button and subscribe so you don't miss out on future videos. And if you have any thoughts, please comment below, let me know, and I will take some time to respond. Until next time.